Sean Peche, Ranmore Fund Management founder. Sean, by now everyone knows what keeps you up at night. It's not the kids nor the wife moaning. It's Bob van Dijk and the rest of the management team at Naspers and Prosus. If that's to run a university course, it would be on value destruction. There's no emotional attachment here. You don't own either company, nor do they feature in your benchmark. Prosus's weighting is negligible. But before we bite our teeth into each of the separate corporate actions, do you want to provide some background on the issue?
Yeah, look, I mean, Justin, let's just talk about why am I even writing this thing? And the first point is I really don't like injustice. And what I see is gross injustice towards the South African savings market by the Naspers and Prosus companies. And I don't hear the large shareholders and fund managers publicly raising their voice. And that may well be because they're too scared of ruining their relationship with management. I understand that. But I have no relationship with Naspers or Prosus management. I've never spoken to the top guys, and I really don't care about that. And I'm going to say what I think is right. And if large shareholders disagree, they can come online, they can get on LinkedIn, they can tell me why I've got it wrong, say it publicly, and that's not going to be a problem. I won't disagree with them and I'll hear them. But at the end of the day, Prosus listed in September 2019, and $100 invested then would be worth $143 if you put it in the world index, $148 in Tencent, 220 in Microsoft, 223 in Google, but instead that $100 is worth only $100 in Naspers and $100 in Prosus. So they've added no value since September 19. And even my fund, which is a value fund and hasn't participated in this tech rally, okay, is worth 143. And if my fund was worth $100 now and the world index was 143, I can tell you I would have no investors because they would have fired me. And Naspers has no excuse because Tencent's worth 148. So these aren't my views. I'm just expressing and highlighting what the market is saying loudly about the state of affairs.
Sean, you've been around long enough to have seen this movie before with other management teams. How long does it take for shareholders to be fed up to the extent that they overthrow management?
Well, the problem they have here is that there's this control structure. And if I was in South Africa and I had a major shareholding, in Naspers and management were not bending, I would do absolutely everything I could to wreck this control structure. Because, look, that control structure has served South African investors well because maybe you would have had a hostile takeover come in beforehand and, sell the Tencent shares and wouldn't have participated to the extent that they had done. But it has served its purpose and it's time for a new thing. And I would, if that was, legally, I would be, I don't know, challenging it at the constitutional court. How can this company hold the country to ransom? And so, historically, I guess you haven't had these control structures. And so if you don't like management, more than 50%, you kick out the board. That's what you do. That's what you do in normal corporate. You don't like the shareholder, you don't like the board. They're not responding. More than 50%, they're gone. You can't do that here. This company, this board controls it with something like 0.2%.
Let's start with the corporate actions and we'll start with the buybacks. Corporate actions are used by investment holding companies to unlock value, not value destruct, which is what we've seen with Bob van Dijk and his team. The buyback story is twofold. Firstly, on price, they've lost a quarter of their money with both Naspers and Prosus. And then secondly, it raises question marks about the buybacks artificially keeping the share price higher as a result of them being a high part of trading volume for those days. Could you elaborate on both of those points?
Sure, Justin. If I was buying back, if I was a CEO and I was buying back, I mean, even a fund manager, you don't show your hand. You might have a buyback program, you say I'll buy back as and when. You don't publicly, unless you have to, disclose every week, this is how many shares we bought last week. I think it's one of the problems you're seeing with the likes of ARK Invest. Investors are playing against them because they're seeing what ARK is buying and they're buying them the next day. And now what's happening is they're seeing what ARK is selling and they're shorting ahead of it. And so it undermines it. But if everybody knows you are buying back stock aggressively, well, they might try and front run you. And so you sit there and you just nibble as and when. And I found it really quite interesting because Prosus, if you look at the buyback that they enacted, they were a very high percentage of daily trade. And if you look at all the algorithms that are out there, if you are more than, you speak to electronic traders, if you are more than 5% of the daily trade, those algos will sniff you out. And so I would just think it's it's doing a disservice. You want to be very passive, especially right now when tech stocks are under pressure. You pick your days and you buy back softly and very passively, and that's when you get a good price for shareholders. And I'd suggest that they haven't. And yes, I know that if you look at, they could have saved, I don't know, $30 billion, 30 billion rand if they bought back the Naspers and the Prosus shares today. We didn't know that, and I know tech stocks have been weak. But remember, the Chinese stocks were weak before this period. So it's just not been sensible, if I have to be perfectly honest. And it's no good buying back value that you think is there at the center if the value at the center is being destroyed at the same time.
Delivery Hero, another hype industry, huge euphoria, valuations got to unexplainable levels, which has been decimated in a large degree in the last 6 months. Can you do the numbers for Prosus investment in Delivery Hero in the last year or so?
Yeah, I mean, this really is what brought this company to my attention, because as I said, we don't own shares in Naspers, we don't own shares in Prosus, and every day in our morning meeting, we just have a quick look and, well, what were the worst performers and what were the best performers the previous day, and Delivery Hero was the worst performer in the world index on the one day, and the next day it was in the bottom 10. So I thought to myself, well, hang on a second, didn't Naspers buy some shares in Delivery Hero? And I had a look on Bloomberg and I saw that they bought 27 million last year, with the last tranche bought in October. And that cost them 3 billion euros. And in fact, they were so keen on this company that they applied to the regulator to increase their holding above 25%. Okay. And then they bought their large tranche in October. Now, the other day, Delivery Hero issued a trading update, and we're talking to the period end December. Bearing in mind that they bought in October, period end December. And the market was so disillusioned that the stock dropped 40% in 2 days. And they're now down 60% on their investment last year, with a $31 billion rand loss. I thought to myself, this is value destruction on a monumental scale. And they're supposed to really understand this business, because you'll recall they tried to buy Just Eat in 2019 for, I think it was about £5 billion. And let's just remember, in 2020, when we were all sitting at home ordering takeaways because you couldn't go to restaurants, Delivery Hero lost 1.4 billion euros. So, and now you've got more competition, there's more apps, and you can go out. So, I've just been it's just puzzled me what the interest is in this food delivery. And, I just cannot think that people delivering burgers on bikes is somehow technology. And so it wasn't a surprise to me, and I find it staggering that it was a surprise to Prosus. And I didn't have a 3 billion euro bet on this thing.
I couldn't believe the numbers attached to BullDesk's valuation in your thread. Sean, Naspers and Prosus, they value the non-Tencent portfolio at $50 billion. But if BullDesk is worth 10% of that, $5 billion out of the $50 billion, you seriously got to start asking yourself, how much is this non-Tencent portfolio really worth?
Well, I think that's a very valid point, and I find it staggering. I mean, 4.7 billion. BullDesk made $37 million, and those are unaudited accounts. So that's 130 times earnings. So what I think the problem is, and just to put it into perspective, that nearly $5 billion is a third of the 14.6 billion that they raised from selling Tencent last year. Okay, so it does not add value if you sell Tencent and you go and use those proceeds to buy something at 130 times earnings on unaudited accounts. If I'd known that, I would have said, listen, just keep your money in Tencent and we'll take our chances in the Chinese government and the VIE structures. You just cannot see, this is not a new market. We've got an analyst, Hiren, who lives in India. They are way ahead of everybody else in terms of online payments and via apps and all the rest. And in fact, the government's involved. So I think the chances for profitability are far lower. And, so when I put all that together, Justin, I say to myself, management are no longer passively not unlocking value. They're actively destroying value.
Sean, Swiggy, an Indian fintech business in the stable, was valued at $10.7 billion in a new round of funding earlier this year, adding more than $5 billion in valuation in less than 6 months. This, while listed like-for-like peer Zomato was down by more than 40% in the corresponding period. You just really can't make this up.
You can't. And go and have a look on the Prosus website, because they disclose their NAV calculation. And I find it staggering that for a technology company, they can't have it live and that it's back at 30th of September. So I then ran the numbers and I said, okay, well, they're listed investments. How well have they done? Well, let's just run through the list. Remitly is down 65% since September. VK, which used to be the mail.ru, is down 61. Delivery Hero is down 58. Skillsoft 47. Cinch down 43. Trip.com, came in second at only minus 2%. Thank goodness for Tencent. So yet again, Tencent is carrying this group. And if that is any indication of what the unlisted are doing, you can take those, you get not a pinch of salt, a handful of salt. One stock out of 7 since September. Who is making these calls on billions of dollars of South African savings? Because from what I can see, the track record is appalling. And this brings me to my point, because if you look at that NAV, Justin, it's showing 133 euros a share. Okay, what's the share price? 68. So people don't believe the NAV, and most of the NAV is a listed price. Now that 50% lower, so the share price is basically half NAV. That 50% is $110 billion. And according to Bloomberg's, Naspers owns 57% in Prosus. And per the Naspers annual report, 45% of Naspers is domestically held. So here's the punchline. South African shareholders are suffering a $28 billion discount, which is 422 billion rand. And this 422 billion rand is not showing up in people's pensions, retirement annuities, unit trusts. And why? Well, because the market has lost faith with this management team, complete faith. When you look at the value destruction, you have to agree.
Sean, as you point out, people have given up on this discount narrowing. In the last 24 months, all the reason that this discount exists have come to light, whether it be the VIE structure, horrible capital allocation, or just simply unrealistic asset values. The 40% discount exists for a reason. So what are you actually betting on here as an investor? Tencent?
Probably. And you have to ask yourself, well, what is the Naspers board going to do about it? And I had a look, and they're 18, because at the end of the day, the responsibility of board of directors do not sit around to drink tea and shoot the breeze. They are there. They are the representatives of shareholders. And there are 18 directors on the Naspers board of directors, and that cost $5 million in 2020 to run. Now, just out of interest, Microsoft has 12 directors, not 18. And it cost $3.9 million. And Google has 11 directors, and it cost $4.4 million. So how can these trillion-dollar operating businesses, which are not holding companies, cost less and have fewer directors? I find it just doesn't add up.
Sean, you started another thread showing what Naspers could do with the money in South Africa. I don't want to assume anyone's read it that's listening. So before I ask you any questions on it, could you just give a high-level summary of what that outlined?
Well, that really came about because I read I did 2 posts, and the first one, I read to my wife, and she said to me, well, what is the positive message out of that? Because I guess I was having a bit of a rant. And so I tossed and turned, and you're right, it did keep me up at night. And I thought, well, what would I do with my money? And I'm not on the board, this is not my thing. But I would just say, let's learn. Why didn't they learn from Tencent? What has Tencent done? It is basically a venture capital business in China. And they have taken their money and they've invested in these startups. And when these startups have done well, and they've supported them, and they've helped them advertise, and they've helped them on the legal side, etc. And when they've flourished and blossomed, they have then listed them and created more value. And it's been amazingly successful. So why doesn't Naspers do that in South Africa? And why doesn't Naspers, we've got such big challenges in South Africa. There's the energy crisis, but yet we've got wind, we've got sun. We've got, brains. It's where Elon Musk and Mark Shuttleworth come from. So there is the talent, and there is the drive, and there is the entrepreneurship. And so why doesn't Naspers, if I were running the show, I would sell 2% of Tencent every year. Okay? Slowly, consistently. I've looked at the numbers. You can do it. You don't have to flood the market and do big discounts. And I would take that money and I would invest it in South African, I'd create, want of a better word, silicon cities in various places, each tackling these things. And I think, and investing in these startups, and then the technology can be developed. The lawyers can patent it globally, which is quite a challenge for small businesses. and build it from there and do a Tencent in Africa. Because at the moment, they're trying to find other needles in other haystacks in Asia, and everybody's looking there, and they're not going to find them. And actually, all the needles that they think they've found, we've just run the numbers now, and they've been a disaster. They haven't actually been needles. They've been, if anything, they've been poisoned needles. So yeah, that's what I would do. But I tell you what, I just can't see how this management team are going to do it. And what worries me is you look at how much the company has paid the two execs to put South African shareholders in a 422 billion rand hole. It's 1.5 billion rand in the last 5 years. Go and look at the last 5-year accounts, add up the remuneration, 1.5 billion. And you say, well, how on earth did they come up with this number? Well, the head of the Remuneration Committee is a private equity CEO from America. And you go, well, I mean, is that the right person? And they compare, they do a benchmark to Amazon and Alphabet and Facebook. But again, those companies are operating companies. Prosus is a holding company. And by their own admission, 75% of the value is in Tencent. And they have committed, the directors have committed to do nothing for 3 years. So how on earth do you justify paying more and paying obscene amounts of money to the executives who are destroying value? It's got to stop.